Hello, ladies and gentlemen. First of all, thank you so much to have me here to address your audience on the TEDx platform. I am truly honored. And the fact that we're having an online TEDx talk is just amazing. Today, I want to talk on the idea of stock markets. I want to talk about the idea of stock markets. Stock markets. Now, when you hear these words, either you already have a notion about them or you have heard a notion about stock markets. Today, I'm going to address the three most common notions people have around stock markets. The first one is that stock markets seems lucrative. It's good, but I don't have time for it. The second notion people have is that stock markets is a gamble. It's too risky. I don't want to get into it. And third notion which people have is that stock markets, buddy, they are too complicated. I'm not smart enough. Stock markets is not for me. Today, I'm going to address all of these three notions. My name is Goela, and I have an experience in stock markets of 10 years. And in my 10 years in stock markets, I have read several books, seen several interviews, talked to several analysts and stockbrokers, and I know the common mistakes traders and investors make in stock markets which don't end well. What I'm going to share with you today is not something which I've read from a book. What I'm going to share with you today is something that over all these years I have observed, discovered, and learned. So let's start by me sharing a story with you. And mind you, this is a real life story. This story is of a high achieving individual who is the ex-general manager sales of a big private organization in our country. Yes, ex-general manager sales. So you can imagine his aura. He having a fancy car given by his corporate organization. He having yes men surrounding him in his office. There are several people there around him to please him every second time. And he is that person who people always used to come seeking to help. Right? People used to come to him seeking for help. Now, all of us have that one family member in our family who's very important, and he is the high achiever in that family. This gentleman is that. Now, this gentleman retired in 2010. Now, when he retired with a retirement corpus of 80 lakhs. What was his retirement corpus? Basically, all his liquid assets, his PPFs, his fixed deposits, his accounts, his money in the savings accounts, all his liquid deposits were in 80 lakhs. And then in 2010, the banks were offering him an interest rate of 9% per annum. Now, as Indians, traditionally, we always do this. We take our entire retirement corpus, put it into the bank, and we get the interest on it. Right? This gentleman did that exact same thing. Now, he took that 80 lakhs retirement corpus, put it into the bank on which he was getting 9% per annum interest rate. So, on a monthly basis, he was earning 60,000 rupees. Now, to tell you about his family structure. He has a family of 4, of a wife and 2 young adults, right? And again, this is not him. This is just a random picture that I've chosen from the internet. Now, his family expenses were of education, travel, entertainment, basic food expenses. All of them together, his family expenses on a monthly basis were of 50,000 rupees. Again, this is in 2010. Now, this is where I want you to focus. See here that when he put his retirement corpus in a bank, every month he was earning 60,000 rupees from the bank. And his monthly expenses were only 50,000 per month. Can you imagine a better situation than this when a person in retirement is gaining 10,000 per month? Nothing can be better than this situation. Now, 10 years fast forward, let's come to the present day situation of 2020. Now here I'm going to compare the 2010 and the 2020 situation of this gentleman itself. Now, first, the retirement corpus of 80 lakhs shrunk to 65 lakhs. Why? Because he had to get his two children married, which costed him about 15 lakhs. So he had 65 lakhs. In 2010, the bank interest he was getting was 9% per annum. And in the year 2020, the bank interest he is getting is 5% per annum. I want you to realize that how the bank interest rates have decreased. Earlier, his monthly income in 2010 was 50,000 rupees, and in 2020 his monthly income is only 27,000 rupees. How did I calculate 27,000 rupees? Because in 2020 he has retirement corpus of 65 lakhs, on which he's only getting an interest rate of 5% per annum. So on a monthly basis he will get 27,000 rupees. Now, like I told you earlier his family expenses were of 50,000 rupees, the entire family. Now, in these 10 years, his children, like I told you, have gotten married. They have good jobs. They are self-independent. So now his only expenses are of him and his wife, of travel, healthcare, food expenses. And do you know how much expense he incurs on a monthly basis for him and his wife alone in 2020? It is 61,000. 61,000. Now in 2020, what would you suggest him? Would you tell him to continue eating out of his capital so that he has no money if there's any unforeseen circumstance in the future? What would you advise him? You know, this gentleman came to me and said, Harsh, I wanted to sponsor my grandchildren's education. I can't. I have to take money from my children. It hurts. I want you to again recall, this gentleman was the ex-general manager sales. He was the general manager sales with a fancy car, yes men surrounding him being the most important family member. And today, he's financially broken. And you know, he's not only financially broken, because if a person is financially broken, you can give him money, finance can be recooperated, and he can stand up again, he can revive. But this gentleman got emotionally broke. He didn't like the fact that from that level, he had come to this level. And with no fault of his, because he was doing the normal thing that everyone does. And if a person is emotionally broken, to revive him back is very difficult. What was the disastrous moment in his life? What ruined his finances were these two factors: decreasing bank interest rates and increasing inflation. If you see the past decades, the bank interest rates have decreased and decreased and decreased, whereas the inflation in our country has increased. Most of us, we keep our money in banks. Either we are already facing this kind of financial crisis, or we will face this financial crisis. That's for certain. If you compare the banks to stock market, if you put your money in banks as of now in 2020, you get a bank interest rate of 5% per annum, right? Now, on the other hand, if you invest your money in stock markets, on a simple stock market asset like stock market instrument like investing in index funds, historically we have seen that stock markets over the longer period of investment gives you a return of about 15 to 17% CAGR. 15 to 17% compared to 5%. Do you see the difference? This is what the difference is. I'll tell you another interesting thing. there are three types of people in any economy. In any economy, we have three kinds of people. In the lower bracket, we have the lower income group. Then we have the middle income group, which is also known as the middle class. Then we have the high income group, which is at the top of the food chain, top of every chart, which is the rich people, which are the rich people, right? Now, in every economy, these three characteristics of people have different qualities. Now, you'll always see a person who is in the lower income group will keep his money in cash, and he will keep that cash at home or either in a locker in a home, right? He will not put it in a bank. And because of which the lower income group people are heavily affected by inflation and go even down, even further down the table. Then comes the category we know too well, the middle class category. Now, middle class people always prefer to put their money in banks. Earlier, when the bank interest rates were not decreased so much, earlier when the inflation rates were not this high, the middle class people went through. Why? Because when they put their money in banks, at least the bank interest rate was beating the inflation. Now in the current situation, and trust me, this situation is going to keep moving on in this direction where the bank interest is reduced and the inflation increases, it's difficult for the middle class people to survive. And if you are in this category of middle class people, you know what I'm talking about. Then comes the rich people, the high income group people. Do you know where do they keep their money? Swiss banks. That's a joke. Don't take it seriously. The rich people always put their money in stock markets. They invest their money in stock markets. That is why you will see the difference between rich and poor in our economy has been constantly increasing. Stock markets is that ladder which is the difference between rich and poor. Stock markets is that ladder which will take you to financial freedom. Stock markets is that ladder which you need to climb. So the notion that stock markets are good, but I don't have time for it. Well, if you have learned anything from the story I've told you, and if you learn anything from the several such stories around the globe, investing in stock markets is essential for you. Start investing right now. If you're 18, it's never too early. If you're 60, it's never too late. Irrespective of your age or career, investment is mandatory for us. Not only for a financial future, but for our emotional well-being. Now, the second situation. In the second situation, the second notion what people have is that stock market is a gamble. It is too risky. Now, I'm sure you must have heard horror stories about stock markets, right? Wherein your family friends or your family have lost a fortune in stock markets. And truth be told, those stories are true. That does happen. Now, if stock markets are so risky, why am I advising you to put your money in stock markets? Why am I advising you to take stock markets seriously? Now, there are two major reasons why people lose money in stock markets. Reason number one why people lose money in stock markets. Now, the basic principle in stock markets is that if you want to invest for the longer period of time, the knowledge you need is zero. But if that period of time shortens, the knowledge you need increases. Let me explain. Okay, so suppose if I ask you, sir, suggest me an investment for 10 years. What would you say? You would say, Harsh, you can buy companies like Pidilite, you can invest in shares of ITC, Reliance Industries, HDFC Bank. Why? Because both of us know the probability of these companies doing well in the next 10 years is extremely high. Now, on the other hand, I ask you, tell me a good investment for 1 year. Tell me a good investment for 1 month, 1 week, 1 day. Tell me a good investment for 1 hour. What is the level of knowledge you need? Extremely high. Now, the problem what people face is that, especially this happens with newcomers in stock markets. Because we see a couple of videos on the internet, we read 1 or 2 books, and we start doing short-term trades. For the thing you need most knowledge for, People start with nothing. Let me tell you, it takes years of practice, patience, research, and study to become a profitable short-term trader. It is not a time pass. But the problem is that people start with short-term trades, not with long-term investments. The second reason why a lot of people lose money is because a lot of people, especially in Indian markets, they operate on tips. They invest and they trade on tips. Now, tips never work. Now, let me logically explain you why don't investment tips work. Let's take this case study, shall we? Okay, now let's take this case 1. Now here, as you can see in the stick figure, this is me, very comfortable in my house, and in the next picture you can see my office. Now if I want to travel from my house to my office, the distance between my house and my office is 3 kilometers. If I ask you, sir, please advise me the travel options. What modes of commutation can I use to go to my office? What would you advise me? You would say, Harsh, you can take a car, you can take a metro, you can take a bus, you can even walk it. Right? Fair enough. Now in the case 2, wherein I have to go to Mumbai. I live in Delhi and I want to travel to Mumbai. And the distance between Delhi to Mumbai is 1413 kilometers. Now, what travel options would you advise me? Metro? Car? You advise me, Harsh, in this situation, either you can take a train or board a flight. Right? Now tell me this, in case 3, if I ask you, I have to go somewhere but I don't know where and I don't know how long is the distance, what travel options would you give me? Would you tell me to travel by a car, bus, plane, train? What would you tell me? Would you be in any situation of advising me what mode of commutation should I use? What mode of transportation should I use? Nahi. Why is that? Because you don't know where that journey ends. Same situation is in stock markets. If I don't know your financial goals, if I don't know your financial capabilities, if I don't know your financial liabilities, your financial dreams, how can I advise you a mode of investment? On what basis can I give you a tip? Not only me, anyone. Every person is different, every person's needs are different, every person's financial goal is completely different. That is why tips don't work. Because on a general basis, if a person is giving tips, he does not know all these details about you, and because of which, whatever tips he gives will never work for the longer period of time. So, coming to the notion that is stock markets a gamble? Well, if you're making long-term investments, if you're indulging in long-term investments, then certainly it's not a gamble. On the other hand, if you're doing short-term trades without getting professionally trained, and if you are taking tips and you're operating on tips without understanding the stock markets, then you have made stock markets into a gamble. And this is what people end up doing. It's unfortunate, but it's the truth. Now coming to my third notion, and this is my favorite notion what people have about stock markets, is people think that stock markets is too complicated. Harsh, stock markets too complicated. Now, I'm very fortunate because I meet a lot of new people on a daily basis. And I always have this one question to ask people. I ask them, do you invest in stock markets? Generally, the answer I get is no. Then I ask them, why? You know what people tell me? Harsh, stock market is too difficult. Harsh, I'm not from commerce background. I don't think I can understand this. Harsh, I'm not smart enough to crunch those numbers. ये मेरे बस की बात नहीं है. You know, this industry, because of the media, books and professionals, because everyone uses such heavy words, heavy terminologies, flowery languages, people easily get scared of stock markets. But in reality, let me tell you, stock markets is the easiest thing to understand. The best things in life are always simple, and stock markets is the simplest out of the lot. Let me explain you this by an example. Let's take the case of Warren Buffett. Now, I'm sure you have heard about Warren Buffett, and if not, then Warren Buffett is one of the greatest investors of all time. Now, one of the best investments of Warren Buffett proved to be his investments in Coca-Cola. Right? Now, Warren Buffett, invested in the Coca-Cola company in 1988. Now, in 1988, the Coca-Cola company was relatively very small to what Coca-Cola is right now. Now, let's logically analyze this. What is Coca-Cola? Coke, the drink of Coca-Cola, is nothing but aerated flavored sugar water, right? Aerated flavored sugar water. Now, on the streets of Delhi, you also get an aerated flavored sugar water, which is a locally made drink in Delhi. That drink is called Banta. Right? Now, just imagine if I took you to a small company which is manufacturing Banta and I'd ask you, sir, please invest in this company. What would you tell me? Have you lost it? Right? Why? Because you would be doubtful of that company's profit, you would be doubtful of that company's sales, you would be doubtful of that company on an overall that it can ever do well. Am I right? Now let's take the case of Warren Buffett again. When he made the iconic decision of wanting to invest in Coca-Cola, he didn't only look at the balance sheets. He saw that people liked the taste of Coke. And he saw no reason why people would not buy it on a larger scale. And he invested in Coca-Cola. If balance sheets and number crunching was the answer to stock markets, then every commerce graduate would have been a millionaire today. Some of the biggest investments are made on the simplest reasons. In stock markets, you do not need a high intellect. All you need, my friend, is common sense. That's it. It's just pure common sense. Think about this. For the past 20 years, all of us knew that internet and technology is the future. And it has done great. But did we invest in it? No. Standing here today, you know that artificial intelligence, electrical vehicles, renewable energy is the future. Are you investing in it? No. You know, all of us have these conversations in our households. We say that, I wish my grandfather had invested in that, had not sold that, had bought that. Look where we would have been today. Am I right or am I right? हम सब बोलते हैं काश दादाजी वो खरीदते या वो बेचते नहीं आज हम किधर होते. What I'm here to tell you is that I don't want that your grandchildren should say this about you. I don't want that your grandchildren should say this about you. Even today, you have several opportunities around you. You have several companies and industries with massive potential. And you just need to choose one. And what do you need for that? Simple common sense. That's it. That's it. I am here to tell you is that the notion number 3 which people have, stock market is too complicated. It's not. All you need is common sense. You know, this is the reason why me and Aditya, my brother, both of us started training people in stock markets because there's such a lack of awareness about it. Let me tell you about myself. I am someone who as a kid fell in love with stock markets. My father was always an investor in stock markets, him being a chartered accountant. So I remember him looking at the closing price of every share with the magnifying glass in Economic Times. I remember him taking me to the stockbroker's office. I fell in love with the stock markets. I am someone who after school did not even go to college. I am not a college dropout. I did not go to college for my love and passion for stock markets. I am someone who has achieved financial freedom with stock markets. And I am here to tell you is that whether you want to make this your career or not, Whether you are earning very handsomely or not, investing in stock markets is mandatory for you. And if I, a person who did not even go to college, can reach this level, trust me, you're in a much better position to go even higher. Take stock market seriously. Stock markets is the ladder between rich and poor. And I want to make sure that you climb that ladder. Thank you.